Alright, what's good? Welcome back to episode 3. I was a little too locked in on the reels that I forgot that I was making this series of taking you from nothing to profitability. So obviously this series in itself will not be enough to take you to profitability. Or that's what other people would say. But the way that I teach is so legendary that after this you'll be straight away ready to hop in and make some dough. So here's a strategy that I used to actually bag out last year from a prop firm. Passing the evaluations is definitely the hardest part, for new people at least. Because like towards the end of the year, once I got that momentum, I used some of my previous payouts to pay for more accounts. It's definitely a lot easier, you have less stress, and you're able to get them out like nothing. So in this episode, I'm going to be first diving into some of the indicators that I use, and which will then go straight into the actual lesson, which will be on Killzones. So as you can see above, I'm on the 30-minute time frame. I don't think it shows any higher than the 30-minute time frame, the actual sessions, just because on the hour, like 2-hour candles are already too much. So you have to be on at least a 30-minute candle to show all of these boxes for the Killzones. So this session indicator is called ICT Killzones, and then it should be like Tradinator. Boom. That's the name of this one that shows you these sessions. You can change the colors to adjust them to your charts. That's my first one, and that's the favorite one that I still use along with this daily candle right here. The second one that I use here is this daily candle. It shows you the daily candle on the lower time frame. This is important because on the lower time frame, something that you can't see on the higher time frame is the liquidity that it sweeps internally. So like 15.5 and lower than that. Like swing highs like this, you wouldn't be able to see them on the daily candle. And basically why this is important is because after the market opens again and a new daily candle starts developing, you're sort of looking for a liquidity sweep, creating the wick of the daily candle like this. This is part of one of my models that I use. This one is called Higher Time Frame Power of 3, HTF Power of 3. So let's duplicate this. HTF Power of 3. I'm not sure who made that one, so just search that up. You should be able to find it. You could also change the color of this one. So that's the second one that I still use to this day. And then there's a lot that I use that I no longer use anymore. So I'm just gonna dive into some of those that I still have saved. So one of those is, okay, you can use a watermark as well. That'll just kind of show you patience, discipline, fearless. You can change these up to say whatever you want. The trading dojo. Boom, look at that. And you could change the bottom ones as well to whatever you want if you want to open your charts and see something cool. And then some of the other ones that I used was for value gaps. The reason why I don't use this anymore is it like literally marks out every single fair value gap up until they get disrespected. And one of the flaws is that disrespected fair value gaps also work. Right? Disrespected fair value gaps become inversion fair value gaps. So if you're only looking at the ones that are still there, you're missing out on one of the key components of trading fair value gaps, which is trading the IFEGs. So that's one of the reasons why I don't use this anymore, because I am now to the point where I can just look at the chart, see the fair value gaps right away. Right? You'll train your eye the same way, but I do recommend using this, and I do recommend learning more about IFEGs so that you can recognize them and know which ones are still relevant. So yeah, that's another indicator. You could also change the colors. You can make it just a outline box like this. I think I have it listed as border. Yeah, you can make it look like that as well if that's a little more clean. Changing the colors, whatever. You can customize almost every indicator. I'm gonna get rid of this one for value gap and watermark. Okay, let's hop into the next one, which is liquidity levels, which is just highs and lows. So if you're coming from support resistance and you wanna get to those liquidity levels, same thing, it disappears after they get swept. So it won't show you the ones that like were there previously, and then I don't think it shows you. Oh, it looks like it does show you the ones that are in the past. This is also pretty useful. It shows you swing lows, swing highs, kind of saves you the hassle of having to draw it out. But you can still draw it out and like annotate it as like Asia session high or whatever. This is obviously New York session high. But yeah, so you can also use that one. And then I did see some, like Chris uses one of them that kind of outlines the session like this, and it shows you the session on top, and then it annotates the highs and lows of the session. That liquidity isn't too significant. Like it's not going to be used every day. You can use it as a model, but you have to have very specific rules to make it work for yourself. but there's all the other indicators. Just search up liquidity and ICT, something like of that combination. ICT Killzones. You'll be able to find some that show you in boxes with the highs and lows outlined. I just personally didn't like how messy it made my chart. And then another one, okay, so we have order blocks as well. Really hard for new people to figure out what an order block is. So I also use this indicator when I was starting off. Like, I remember asking one of my friends that got me into trading, I was like, I just can't see it. Like, could you show me it? Like, it was literally at a party. And I was like, could you just show me on your phone real quick? And then he tried showing me on MetaTrader because this guy doesn't use TradingView. And I was like, bro, I don't see anything. Like, he couldn't even mark it out. He's just kind of pointing, oh, this is an order block. So it also took me a while to learn what an order block was. So this indicator was really helpful when I found it. Basically, it'll show you right the very highest candle, and you take it from the actual candle body and not the low of the highest candle, right? Not the low, not the wick, but the body to the high of the wick. So this would be the order block. And you can see this already tapped into the order block nicely. The thing with order blocks is either they don't get hit or they barely get wicked into before running down and still respecting the fair value gap. So the thing is, a high probability order block has a fair value gap. So let me make this my normal fair value gap so you guys can recognize it a little bit better. Let's do gray. Okay, so you guys can see this is a bearish fair value gap, and we tapped into the order block low right here, the low of this order block, and you can see that it pulled back. Why? Because it was also wanting to stay within and respecting the fair value gap in the order block. So this is why order blocks are the highest probability. And if you trade futures, not Forex, because Forex has spread and you might not get filled if you add a sell limit right here. But for futures, you can literally get in at the most perfect spot. I've done it countless times where you literally get tapped in at the most perfect spot. You can go break even instantly because you're on futures. There's no spread and it's likely not going to pull back up to this zone unless your bias is incorrect. So that's another indicator, very helpful, order blocks. I'm going to get rid of the most recent ones. Killzones, and where was it? Order blocks. Okay. Let's see if there's any other ones. So these were the main ones that I wanted to show you guys. It does look like there's a lot of people using them as well, so that's nice. Yeah, so that's the main indicators, and to get into the main lesson of this video, it's going to be on kill zones, right? So what are kill zones? When are they at? So let's start from Asia session. First of all, what are kill zones? Kill zones are the times of the most volatile sessions. So you can see that it's called Asia, London, and New York. So Asia, London, and New York. What this means is that during the times that these kill zones are open, those banks for those currencies are open and circulating money. So this is when you'll see that the market moves, specifically not because of the money that is being circulated, but because of the algorithm that's preventing other people from taking advantage of, like, say, news, right? The market doesn't obviously want you to take advantage of it. Otherwise, nobody would work a job, right? You'd just be trading every day. It'd be too easy if you could just, like, okay, the government's gonna print a bunch of money. Let's short U.S. dollar. If U.S. dollar's flying, gold's gonna be going up. Let's buy gold this week, and then you make some money, right? You can do that to some extent, but the algorithm is preventing you from taking advantage of things like that. Okay, so if those banks for the currencies are open and circulating money, then that also means that the currency associated with that session those pairs will be more volatile than the ones that aren't. So for New York, it's the US dollar, right? New York is in the United States, and that's why the US dollar circulates when New York session opens. US dollar is also associated with the euro. Like, there's a pair, Euro USD. So when US dollar opens, Euro USD is also tradable because the US dollar can either be going up or down, and therefore this pair will be affected by the movement of the US dollar. For London session, it's going to be the euro, which means Euro USD. Once again, you could be trading Euro USD because Euro USD is affected by the dollar as well in this pair. So you can be trading that. Also with Euro USD, GBP USD is also affected. So that's also Great British Pound during London is affected. So these two currencies are going to be moving during London session. So these are the ones that you can be taking advantage of. I trade gold, as you can see, XAUUSD. I've only been trading gold for the longest time. The reason is because it's a safe haven asset, and it's not only affected by the US dollar, but it's also being bought up by JPY currency, like the yen in China, and London, Euro, Great British Pound, every currency you could think of. The countries are going to be buying gold when either their currency's at risk, when there's a war, whenever, right? When there's a good opportunity to buy gold. And then for Asia session, this is when most USD pairs aren't moving because this is the JPY session. So pairs like gold, once again, because it's affected by the Japanese yen, is going to be moving. But pairs like GBP USD or GBP JPY, that's one of the favorites that I see people trading. It's super volatile almost all the time. But yeah, during the Japanese session, it's going to be running like crazy. So Asia session is one of those that you can trade. I don't know if this is the right pair. It might be USD JPY. Because I don't trade it, I honestly don't know. But it's probably JPY is the second pair in most of those. So yeah, that's the basic overview of the currencies that are actually moving during those sessions. But how can you actually trade it? So first of all, you want to trade a session or trade a pair that goes along with the session that you are available during. So for me, Asia session's at 5 p.m., right? On days that the market is open. It's obviously Saturday, the market's closed. But on days that it's open, 5 p.m. is a great time for me to be trading. So I'll hop in gold during Asia session. I'll wait for my model and I'll trade it because it's going to be moving. So that's the first step. The first step is going to be choosing a currency / pair that moves during the session that you want to trade or that you are available to trade. So obviously you don't want to be trading the NASDAQ during Asia session because it will not be moving, and I can show you an example of that. So let's hop into NASDAQ. Look at this. Asia session, what is it doing? Nothing. It's building up liquidity that maybe New York is going to sweep the next day. So in this case it didn't, but most times New York does sweep what happened during Asia session. But usually Asia session literally does not move at all because it's not associated with the US dollar. At least not for NASDAQ, which is purely a US dollar based pair. And London, sometimes it moves because London is also like affected by the US dollar. So hopping back on gold, Killzones, right? You're gonna want to pick that pair. That's the first step. The second step is to choose a model that aligns with the characteristics of the session. So once you choose your pair, you begin to watch it during the session and you figure out what is actually going on. So if you know ICT concepts, that's already a big bonus. You're going to be taking advantage of that stuff. One of the other things is if like you're trading the NASDAQ, for example, right? Let's go back to the NASDAQ. If your pair is one of those that mainly only moves during New York session, like with the big volatility, you can see that this mainly only moves during New York session, where we're getting these huge moves during New York session, and the other sessions are just consolidating, correct? So if you have something like this, one of these strategies, and the simplest strategy that you can learn, which like I said in the beginning, isn't the best strategy to learn because you're gonna need to know a lot more than this, right? You're gonna have to be selective about the days, right? The first 2 episodes, selective about the days and selective about the trades that you place in your model. But basically inside of like this session, New York session, you can look at the liquidity of the previous sessions, and if it happens like this where London already swept the high, then the low is likely vulnerable, and you can use the daily bias of is it going to go up or down to predict that because we already swept the high of Asia session, the lows are untouched and we're likely going to run to it. So there you go. That's a simple model, and that's a simple understanding of what Killzones are, right? Pick up that indicator that I showed you earlier in the video. Start watching the Killzones. Start watching the daily time frame on the lower, or the daily candle on the lower time frame, just like this. Watch it develop, watch it close, and that's all you gotta do. That is it for this video, episode 3. I hope you enjoyed this one and are looking forward to the next episodes. Catch you guys later.